What you want, baby, I got it. What you need, you know I got it. Let's check in on some of the moves I made Friday afternoon. So I was watching a little basketball, little NCAA March Madness action on Friday afternoon. And then you know what? Right before the bell ring a dang, 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 I made a few moves I wanted to share with you because, of course, I was just sitting there eating Pringles, not recording anything, but I made a move on Citigroup, sold 5 puts at 39.50. Caterpillar sold 1 at 207.50. Let's see, what else did we do? We did Suncorp, 5 contracts at $27. Valero, 5 contracts at $118. Aflac for a March 31st. Actually, you saw that one. Yes, you did. You certainly did. Wow, that thing's at 98% already. So what I was thinking was I'm going to take some profit on as many of these as I possibly can, just because I don't necessarily know what's going to go on this week in the market. It's been real choppy lately, ups and downs, almost every other day. But in general, the theme definitely feels like more down days than up. And so I thought I'll take some profit today and see what goes on tomorrow and Wednesday, because of course, Jerome Powell speaks on Wednesday. He'll make his announcement on what the Fed is going to do with interest rates. And who knows how the market's going to react. And in the meantime, we could always hear more bad news regarding the banking industry, regarding the financials, all those mid-sized banks that are taking gas. You never know when the next bad headline is going to come up and the market goes, nope, I don't like that. I'm going down now, downtown to Chinatown. But if we look at the SPY, we could see it's been pretty choppy. I should have gotten in on a day trade at about 394. Still can. There's still time to catch a little premium action if it climbs back up to 394. Otherwise, we'll just stick with the trade you saw me make earlier, which was Wednesday expiration, 10 contracts, 400/402. And because of the fact that it's still green today and there's plenty of time left in the theta, it's showing it's down $100. But we'll see. That should change, I would imagine. At least I have my fingers crossed by tomorrow afternoon, when I will look to take that trade off and put 50 to 60% profit in my pocket if possible. But the first thing I was looking at was this AbbVie, because it's under pressure. So I thought maybe I would trade that out and up, because I want to maintain these shares of AbbVie. I think that's a great company. We like botulism with regard to the Botox, and the trend for glamour and TikTok famous will not stop until there's some sort of a catastrophe, which hopefully will never happen. We don't want anything bad to actually happen to the economy. If it slides into a little bit of a recession, that's okay, as long as it then turns around quickly. So let's look at this AbbVie and see if we can't trade it out and up. I'd like to go to 160. I'd like to go to 160 on the call, because it's currently pressing up over 155. It's at 155.27 right now. So if we look at rolling this position, even just 1 week out, can we roll it and get a credit? And the answer is going to be no. So if we look at the 160, the credit would be 79 cents against the 81 debit. So I want to get a credit still. I want to put a couple more dollars in my pocket, try not to go too far out in time. And there is 117. So we'll go 17 days out, right? 17 days out and collect $1.17 against the debit of 81 cents, and be able to increase our potential profit in case these are indeed called away on April 6th. They'd be called away for $250 more per contract, and there's 2 contracts. So let's go ahead and do that. Roll out and up and see if we can't collect. Oh, let's move it down. Let's go with 34 just to knock it off the board. Yes, $68 into our pocket. Covered call roll 2 weeks out. just over 2 weeks, 17 days. So there's that position. Got that going for us. This call, I think it had a wide bid and ask, so I don't know if I want to even mess with it. No, it has no wide bid and ask. It's only 1 penny. So I could shut this call down for $2. Let's go ahead and try to do that right now. And we'll release the collateral of the 200 shares. We collected $96 on this when we sold these calls on February 24th. So to get out of it for $2 and then collect or have a net profit of $94, we'll do that, won't we? We'll do that all day, every day, and twice on Sunday. So, okay, we have accomplished that. So that is off the board. What else we got? What else looks like it needs to come off the board? Yes. So this put is under pressure because Blackstone has taken gas today. So we'll leave it on. Blackstone's at like $81 right now, 81.72, down almost 4% on the day. So a lot of pressure being put, no pun intended, being put on our $80 strike price for a Friday expiration. We'll leave that for now because Blackstone, it goes up and down almost every day. It's kind of like Devon Energy. So these Citi Group contracts, so we've got 5 of these on the board, and I put these on just on Friday afternoon, and we collected $190. So we're already almost 70% in the profit, and I'm happy to take that off just to reduce my risk going into the Fed announcement on Wednesday. I don't know if it's going to fill at the 11 cents. We could try it just for a minute while we look at some of the other revisions to the trades, because it may just go ahead and fill. It'll release $19,750 in collateral, but we may have to come back and go with the 12 cents in order to get it filled today. So that'd be $55 off of our 190. So we would still be in a nice profiteer. We would be profiteering right there. We'll give that a minute to marinate. Otherwise, we'll come back and put the 12 on it. We'll go back here, see what's next, because I think we see some other profits we can take. So we got the pending order right there on the Citi. The Caterpillar it's only one contract, but we're already almost 70% in the profit. And what did we collect on that? We collected $205 bills. And can we get out at 60 cents? Can we get out at $60 and release that collateral? Let's see, that might be up on the pending board too, so we'll leave it for now. Check over here. So we're 95% in the profit on this little baby call on Coterra. And that's because Coterra is way down here at 23.66, but it is up 2% today. So this 27.50 call, this is that wide bid and ask that I was thinking of. So if we can fill it for $1 or $2, I mean, we only made $20 on that call because Coterra was much higher then. It was like at probably $25, $26 at that time. So let's try for a penny. Can we do it for a penny? A penny for your thoughts. It needs to be 5 cents. So that'd be $5 bills. We're going to leave it then. I'm not paying $5 on a $20 trade unless it was in trouble. And it's not in trouble. It is not. What else you got there? We got this credit spread. What did we collect when we put that on? We collected $18. We can take it off for like $2, but it's in nowhere near there. I mean, it's super safe here, 84/83, and Google's at 102. So we'll leave that for now. We'll just leave it on there. We will. Suncor is at around 60%. Let's go down to Valero. Valero has a nice profit going as far as dollar bills. It's got a pretty tight bid and ask, so we might be able to do that for like 32. Pull these 5 contracts off on Valero because it does love to go up and down like a yo-yo, like a slinky. It walks downstairs alone or in pairs and makes a clinkety sound. So we did collect $620 on March 17th. So that was Friday afternoon. We put $620 in our pocket on 5 contracts, and we might be able to pull those off for 32 cents a piece. Just go ahead and put the money in our pocket. So it's going to cost us $160, but it's against the $620 that we've already collected. So a nice profit. In fact, what's the percentage? It's around 60. Total returns around 75%. So, Valero could easily go down again a couple percent tomorrow. Then that would drive this premium to get out up much higher. So let's just see if we can get out of this for a nice profit. Release $59,000 in collaterals. We'll hold our breath. These are not liking to fill right now, are they? So we may have to adjust them all because I'd like to just take them off right now. One of them filled. What was it? My short-term memory. Something came off. What was the second one I put on? I know you're yelling at your phone right now. Come on, Bart. Your short-term memory. Let's look at the Walgreens. We're 91. Oh, something else filled. Yep. So Valero just filled. Very nice. We got that going for us. We do. Oh, Caterpillar. So Caterpillar and Valero both have filled. That leaves Citi on the table. Leave Citi on the table. We'll look back at that in one moment here. Suncorp, I don't mind taking some dollar bills, but let's look at this Walgreens real quick. When did we put that on and for what? So it was put on February 24th. So it was like a 30-day trade, $120. Looks like we can get out for about $20. Can we? Can we get out for 20? Because we get 10 contracts. So if we try to get out for 20, that would leave $100 in our pocket. And then we'd be able to sell these calls again on the 10 contracts. We could just look to roll it. If we roll it, what is it going to show us as the debit? 1 penny. It's going to show 1 penny on the roll. Rolling, ride. We could even roll it down because I think at 33.14, 39 is not going to be under pressure. If we roll it out just 11 days. So if we do math, let's do some quick math. So that'd be like a 19 credit, right? So if we did 20, no. Oh boy, Bart. We could just watch it, right? See if Walgreens gets under pressure, because what has it done for me lately? Has it closed at near 36 anytime recently? And I think the answer is no. If we look back 1 month on Walgreens, come on, Farm Field Internet, you can do it. There you are. If we look at 1 month, the highs were just over 36. And that was the beginning of March. So if we go 36.50, we'd be probably pretty safe. We'd be at 90% chance of profit, 11 delta, and then math would tell us this. So if we take the 0.14, right? If we take the 0.14 and we subtract the 0.01, we have 13 cents, right? So we'd have a 13-cent credit on the 36.50. So if we divide that by 36.50, right? And then we divide it by the number of days, which is 11. And then we multiply that by 365. We'd be looking at 11.8% return on our money plus the Walgreens dividend, which is what these days? The Walgreens dividend is almost 6%. So that's, you combine those two returns and it starts to look pretty favorable. The downside is of course, we can have those called away. And then you're like, you're out of luck, Bart. Sorry. So let's try it right now. See if we can't collect, because we might not be able to get that premium. We might have to go to 2 on the debit, which would essentially then reduce to the net credit to 12, which is fine as well. And it's already showing 12. Well, we'll collect 120. We'll collect it. So covered call roll 11 days out. See if we can't fill that, put 120 into the pocket. And it may not happen. We may have to come down to 11 credit, which would put us at 110, and we can run the math again. And either way, the math is very nice, very positive. There we go. Looks like it might have filled. Might have filled for us. Going back, we're already at 16 minutes. Don't keep them waiting. So it's still showing pending right now. Let's go back to the city. What is city doing in general right now? If it's still up, we'll still be in good shape. On the city, it should be up, but how much? Okay, it's up 1.31% at 44.83. And we have 39.50 calls. Let's cancel and replace and see if we have to go to 10 cents. Do we need to go to 10 cents? We got 5 contracts. No, we don't have to go to 10 cents. Why didn't that fill before at 12? Let's go to 13. Oh, yeah, we're buying it. Keep up, Bart. You can do it. So we're buying it out, $65. The rest is all the profit. And we'll release this capital of $19,750. That should fill right before our very eyes, and there it is. Okay, so we release that collateral. So our buying power should be going back up. It should go up right before our very eyes as well here. There it is, 2.321. And we started this video, I think, at 2.1 something on the buying power. What else do you see? So our credit spread when we started this video is like minus 100. Now it's minus 20. So it must be sideways to down. And it is. It's down. It's gone sideways and then down. Okay, so that's why this is going to begin to show in the money. And it may not be today, but I would imagine by tomorrow, depending. I mean, the market could go up and go to the moon, and then I'm in real trouble. Okay, so this Aflac is another interesting one. So Aflac must be doing well today. Where's the share price? It's not showing me. Not showing me Aflac. So let's look it up. Let's look up the Aflac. It must be up pretty good today. One of these days, Elon's going to call me. Show today. Yeah, it's going up today. So it's up, whoa, it's up over 3% today. And our position is 57, right? So $57 on the put that we just sold on Friday, and it has an expiration of 3/31. So there's still plenty of theta left in that. Oh, that's why it's tricking me. We can't get out for a penny. It's look at that big time bid and ask spread. So even at the low end of that, that'd be $25 to get out. Oh, and we were 375. That's not bad. So now see these numbers have changed. Shows us at a total return of 62.67. Today's return at 67%. So we'll keep an eye on that. We'll keep an eye on that. I thought those numbers looked a little bizarre. I would have for sure bought out of that for $1 contract. Keep an eye on that. We'll keep an eye on Suncorp, but I am getting long in the tooth here on this video. So I'm going to let you go for now, regroup, see what's going on, and I'll check back with you. We'll find out if that Walgreens covered roll is filled and go from there. See you in the next video.